What's up guys, Corey here. I've seen a lot of indicators that are showing that the market is gonna get a lot worse before it gets any better. And that's gonna be for buyers and most sellers. So what are we waiting for, guys? Let's jump in. Okay, when I say for most sellers, it's because most sellers are gonna sell their property to buy something else. So in essence, they're becoming buyers as well. You know, it's not a win-win situation for sellers in most cases. A lot of buyers, first-time buyers are thinking, man, these sellers are making a ton of money on the property, but they're also having to pay top rates when they go to buy a new house. So the first thing that we're gonna look at is gonna be supply and demand. You know, I've mentioned that previously supply is still very low, compared to where we were like in 2018 even, which was still a healthy market. We were at 5-month supply. You know, now in most markets, we're at less than a month supply. A lot of that is pent up because sellers, they have no options. They can't afford the mortgage payment of the new house. So they're staying put. The other thing is they have so much equity built up in that house, there's gonna be nothing that's really gonna force the sale of that house. So they're staying put until interest rates come down. I just don't see interest rates coming down anytime soon. So we're still gonna have that, that strong pent up supply issue here where we're gonna be at 1 month supply. And yet the demand continues to increase even though interest rates are high. And part of that is because, the millennials, which are a large group of buyers, the largest cohort of that generation is yet to come into the buying category. We're still about 2 years out. So they're gonna be putting more and more demand on the housing market. Now, affordability is an issue, so that's kind of holding some stuff back. So it's almost creating this, this limbo effect where home prices aren't like jumping up like at substantial rates like we saw a couple of years ago, but they are slowly starting to creep up and we're starting to see multiple offers again. The other indicator is going to be the amount of cash transactions, which are not interest rate sensitive. Very strong on the cash market here, at least in San Diego. So I see demand is going to increase a little bit. Supply is going to stay steady, probably around 1 month supply. They continue to come out, like the jobs report. They said that the economy was producing more jobs than what they had originally forecasted. So another sign that, the economy is producing very finely, and the Fed is likely going to continue to increase interest rates because usually more jobs means the economy is good. And since we still have inflation, likely that interest rates are going to go on the rise again. So unfortunately, I say that it's going to become worse because affordability is really the factor that we're talking about, and it's going to become more and more difficult to qualify for those loans as we get more into the fall or even in the spring of next year. I don't think prices are going to come down, and I don't think they're going to go up too much, but the key indicator is going to be where interest rates are at. So higher interest rates means a bigger payment. So just, I'm not saying this is something that's going to make you jump off the fence and get right into the housing market, but I do have, some clients, and then also I've had buyers coming through my open houses at my listings talking about that they're going to wait until the fall because they may think it's a better market. This is just something for you to consider. If you guys want to have a further discussion about this, feel free to reach out to me at 619-200-3236 or on the web at sdcoastalagent.com. And as always, guys, thanks for tuning in. Make it a great day.